Cup and handle pattern is one of the most reliable patterns that generates strong and high probability trade setups. This pattern looks exactly as it's named. It looks like a cup and its handle when you look at it from the side. The cup and handle pattern occurs in both small time frames like the 1-minute chart and in large time frames like the daily, weekly and monthly charts. It occurs when there is a price wave down, followed by a stabilizing period, and followed by a rally of approximately equal size to the prior decline. It creates a U-shape or the cup in our cup and handle. The price then moves sideways or drifts downward within a channel that forms the handle. The handle may also take the form of a triangle. The handle needs to be smaller than the cup. Also, the handle should not drop into the lower half of the cup, and ideally it should stay in the upper third. So there are 4 different stages that lead to this pattern. The first stage from point A to B. The cup and handle pattern starts forming when the market starts going down strongly. The down movement forms the left side of the cup. The second stage from B to C. After a while of having strong bearish market, bears become exhausted, so the down movement becomes slower, and we have a sideways market for a short period of time. The sideways movement forms the bottom of the cup. The third stage from C to D. The bulls take control and the market starts going up strongly, like when it started going down strongly at the beginning of the formation of the cup. This strong up movement forms the right side of the cup. The fourth stage from D to E. After a period of going up, the bulls become exhausted too, so the market stops going up strongly and forms a small sideways section, which is the cup's handle. This part is very important because this is where we can anticipate the next direction of the market. A cup and handle chart may signal either a reversal pattern or a continuation pattern. A reversal pattern occurs when the price is in a long-term downtrend, then forms a cup and handle that reverses the trend and the price starts rising. A continuation pattern occurs during an uptrend, as the price is rising, forms a cup and handle, and then continues rising. Now, how to enter a cup and handle trade? First, wait for a handle to form. The handle often takes the form of a sideways or descending channel or a triangle. Look for buy entries when the price breaks above the top of the channel or the triangle. When the price moves out of the handle, the pattern is considered completed and the price is expected to rise. While the price is expected to rise, that doesn't mean it will. The price could rise a little and then fall. It could move sideways or it could fall right away after the entry. For this reason, a stop loss is needed. Place a stop loss below the lowest point of the handle. If the price oscillated up and down a number of times within the handle, a stop loss might also be placed below the most recent swing low. Since the handle must occur within the upper half of the cup, a properly placed stop loss should not end in the lower half of the cup formation. By having the handle and the stop loss in the upper third or the upper half of the cup, the stop loss stays closer to the entry point, which helps improve the risk-reward ratio of the trade. The stop loss represents the risk portion of the trade, while the target represents the reward portion. Picking a target or an exit point is easy. Whatever the height of the cup is, add that height to the breakout point of the handle. You have to plot a horizontal line above the handle's highest level. The distance of this line from the bottom of the cup is the size of the up movement that will occur after the handle resistance breakout. In this example, I have plotted a horizontal line above the handle's highest high, then another horizontal line below the lowest low of the cup. This is the distance of these two lines. If we had taken a long position after the handle's resistance breakout, we expected that the market would go up for the same distance. This is called a projection target. As you can see, the market did reach its projection. Sometimes the left side of the cup has a different height than the right one. use the smaller height and add it to the breakout point for a conservative target, or use the larger height for an aggressive target. A Fibonacci extension indicator may also be used. Draw the extension tool from the cup low to the high on the right side of the cup, and then connect it down to the handle's low. The 100% level represents a conservative price target, and the 162% is an aggressive target. If you are day trading and the target is not reached by the end of the day, you could exit the position before the market closes. A trailing stop may also be used to get out of a position that moves closer to the target but then starts to drop again. Now let's discuss several important observations that will increase the odds of finding the best cup and handle patterns. Traditionally, the cup has a pause or a stabilizing period at the bottom of the cup, where the price moves sideways or forms around the bottom. It shows the price found a support level and couldn't drop below it. This helps improve the odds of the price moving higher after the breakout. A V bottom, when the price drops and then sharply rallies up, may also form a cup. Some traders like these types of cups, while others avoid them. Those that like them see the V bottom as a sharp reversal of the downtrend, which shows that buyers stepped in aggressively on the right side of the pattern. Opponents of the V bottom argue that the price didn't stabilize before bottoming, and therefore the price may drop back to test that level. Ultimately, if the price breaks above the handle, it signals an upside move. My preference is to have a U-shaped bottom and not a V-shaped bottom. Also, if the trend is up and the cup and handle forms in the middle of the trend, the buy signal has the added benefit of the overall trend. In this case, look for strong trend heading into the cup and handle. For additional confirmation, look for the bottom of the cup to align with a longer-term support level, such as a rising trend line or a moving average. If the cup and handle forms after a downtrend, it could signal a reversal of the trend. To improve the odds of the pattern resulting in a real reversal, look for the downside price waves to get smaller heading into the cup and handle. The smaller down waves heading into the cup and handle provide evidence that selling is losing steam, which improves the odds of an upside move if the price breaks above the handle. Here are several cup and handle patterns on different markets. The classic cup and handle has its bearish equivalent, the bearish cup and handle or the inverted cup and handle, which is a mirror image of the standard pattern. Therefore, the bearish cup and handle is upside down. The bearish cup and handle starts with a bullish price move, which gradually slows down and turns into a bearish move. The handle of the pattern is slanted upwards. The confirmation of the pattern comes when the price action breaks the channel of the handle in the bearish direction. If you look at this example, you can see the bearish cup and handle pattern on this chart. Notice that the pattern comes after a bullish trend, which means it acts as a reversal in this case. Also notice how the pattern starts with a bullish trend, which gradually reverses. In this manner, the created top is rounded. At the end of the reversal bearish move, the price reverses again and starts the creation of a bullish handle. After the price breaks the handle downwards, we see the creation of a new bearish move. The target is located on a distance equal to the size of the cup, applied again from the moment of the breakout, and the stop loss is located above the handle. The cup and handle pattern does have a few limitations. Firstly, it doesn't occur within a specific time frame. Sometimes it forms within a few days, but it can take up to a year for the pattern to fully form if you are trading on higher time frames. Secondly, you need to learn to identify the length and the depth of a true cup, as there can be false signals. And here is another important tip. The longer and rounder the bottom, the stronger the signal. Also, remember that the cup should not be a V-shaped or too deep. If you learned something new and found value, give us a like to show your support, and don't forget to subscribe and hit the bell icon to stay in touch with new uploads. Until next time.